Alright guys, I'm back with another YouTube video, and today's YouTube video is how I made $1,900 today day trading Nasdaq in roughly 10 minutes. So I'm going to give a full breakdown on why I took this trade, what was my thought process behind the trade, and just overall review the full trade. So starting off going into the day, I notified Discord that we're ideally more bullish. So we do have lower draws, we have these lower 1 hour gaps, 1 hour lows. However, I'm more bullish just because on the 4 hour structure and the 1 hour structure, we typically see that we want to take these higher draws. We did invalidate this big 1 hour gap. We're about to invalidate this other 1 hour fair value gap as well. We're very close. We actually wicked it. We didn't fully invalidate it yet, but it was pretty obvious that we want to go higher. And if we do go lower, it's to these lows over here or to tap into this 1 hour fair value gap. But realistically, price doesn't make sense to come all the way down here just to tap in this gap just to go higher, especially after invalidating all this bearish structure and proving that we're bullish. So my highest draw, my most convicted draw, was this 508 draw, just because it's a very high prominent draw. It's just pointy wick on its own. All this is kind of internal liquidity. This is more of the external liquidity. I'd rather preferably target external liquidity or pointy highs and pointy lows or gaps, or new week opening gaps, new day opening gaps, whatever the case may be. I like targeting specific points like that logically makes sense for a price to go towards, rather than just a draw that has a wick. So literally 15 minutes into market open, we hit this 508 draw, which was this draw all the way up here. And let's go review the trade, and this is exactly why I took it, which I'll explain it while showing the trade. So overall, market open at this dotted line over here, this vertical line. So this is 6:30 market open for me, since I'm in PST time, but EST it would be 9:30 New York open. So right here, as you see, market open strictly bullish. We just opened and we already pushed higher. This kind of proved to me that my theory was correct, that we want the higher draws. It wouldn't really make sense for price to come up like this, two pretty displacing bullish candles, and then just proceed lower to these draws. It wouldn't really make sense, and I probably wouldn't take a trade even if I got a setup towards these draws, just because it would have been risky. So after seeing these, we see two gaps formed. So we see a fair value gap over here on the 1 minute, and we see a fair value gap over here on this 1 minute candle as well. And then we get a third bullish candle. So a lot of people actually entered off this displacement right here, targeting, these draws on liquidity, which in my opinion is not ideal, as you have absolutely no confirmation. Typically my strategy, at least, I wait for displacement followed by a retrace and then another displacement. So I'll explain that now. So pretty much we had these three displacing candles, we had these two fair value gaps over here. Price actually retraced back. So this is not a retrace in my opinion. If we have these two fair value gaps over here, price would want to retrace deeper. A lot of people actually got faked out and manipulated, and they entered off this displacement right here. So they entered like this, and this is not ideal just because this is not a retrace. Just because we have one bearish candle after 5 consecutive bullish candles, that does not mean it's a retrace. After 5 consecutive bullish candles, you need a deep enough retrace to at least tap something, or typically at least 50% Fibonacci, whatever it may be. I don't use that stuff, but like it logically, it makes more sense. So I didn't enter here. I just waited. I'm like, okay, if anything, we possibly have enough points over here to possibly retrace and target it again. So it's fine. Like, I'm not missing out of anything. Patience, especially in trading, is key. So we get this bullish candle over here, followed by kind of like a doji candle, indecision candle, which is good because this proves that we do not know if we want to proceed higher or if we want to retrace lower and then proceed higher. So this kind of proved to me, okay, like, perfect. We're not fully bullish, so we're not going to go take out the draw without a retrace. Then following that, we get a nice candle, bearish candle down. We get another bearish candle, which tapped into the most recent fair value gap, which is the most ideal. The deeper the fair value gap, the more stronger it is, but the more ideal for a quick setup would be the most recent. So the strongest would be if it came tapped into here and got an even bigger displacement. But again, this is perfectly fine, because if we're tapping this gap, it doesn't really make sense to come down and tap this gap too after we displace like this. So we retraced into this fair value gap, got a nice displacement candle. So this displacement candle right here was about, let's see, how many points is this? It was about a 42 point candle, which is a pretty nice displacing candle. And the reason this kind of made my confirmation even stronger is on the retrace, we actually created a bearish fair value gap. So from the bearish fair value gap created from the retrace, we invalidated the retrace with a strong displacing candle. So this proves my draw is even more accurate and confirm my entry even more. So this is where I entered right here. I put my stop loss below the fair value gap just in case if we want to wiggle around in the fair value gap, I won't get stopped out. The second we take this internal high over here, I went break even. So this is exactly what happened. We entered over here, market take profit obviously at the draw. Some people could extend it because there was actually a 5-minute gap, so some people took it all the way up here, which is perfectly fine as long as you secure your profits after we take the draw, just in case price wants to reject lower. So the second we enter here, we did kind of like for like 2 minutes, not really chop around, but like we were just like displacing up and down. We weren't really like deciding where we're going. And then we get this nice rejection candle over here, proving price came all the way down here, and then price rejected all the way back up, showing buyers are still in position. So automatically from here, you saw 3 bullish candles, passing completely through the draw on liquidity. And this is exactly the trade I took to make $1,900. And I did also take it on an evaluation account. The valuation was just a top step trade. Just I believe it was only like $800. I accidentally entered less contracts than I anticipated. There are usually evaluations. I always risk like 2 to 3 contracts, so it would have been like a $1,500 trade. But let's go through why I took it. So pretty much I explained everything visually. Now I'm going to explain it on text. So we had a strong draw on liquidity, which was the 508. We had a clean fair value gap retracement, which was this 1 minute fair value gap retrace. After the retrace, we had strong displacement. So this candle over here that displaced higher, and the displacement invalidated the fair value gap during the retrace. So the fair value gap right here on the displacing candle that was to retrace and balance price out actually created a bearish fair value gap, and the price displacement after invalidated that bearish fair value gap, proving that we do not care about that bearish fair value gap, and it was just to retrace. So then we took an entry off the displacement, target set to the draw on liquidity, stop loss placed below the fair value gap just for a safe entry, stop move to break even after until high was taken. So the second we took this high, we went break even just in case if price comes down, then it would be a risk-free trade. We would lose absolutely nothing. We would just zero out on the trade, which it wouldn't really make sense because realistically this trade was in my opinion, one of the most A+ trades we had in December. Honestly, December price action has been very, very good, knock on wood. Especially this one. This was honestly my most textbook style like trade I could take. This is literally my full strategy for the people asking. This is exactly what I take. I wait for strong drawn liquidity, retracement into some sort of gap, or like at least a deep retrace followed by displacement, enter off the displacement targeting the drawn liquidity. That's literally all I do. It's even better if we invalidate a fair value gap that we created during the retracement. That's like extra confirmation. But overall, you don't really need it or your fair value gap tap. I just strictly trade off displacement and draw on liquidity. That's my full model. Keep trading simple and you will actually become profitable. It's so much easier that way. You don't need 500 concepts or 500 different words. All you need is those 2 things, strong draw on liquidity and a safe entry. That's it. And that's pretty much it for today's video. I have a completely free Discord that you guys can join. I give out my signals, my daily draws on liquidity. We have a full trading chat with new people that are getting into trading. You guys can help each other out. I answer any questions you guys have in the questions tab. Any video suggestions you guys have, you guys can put it here. I'll make sure to make any video you guys want. I have a full trading glossary that goes through every single trading term possible. And yeah, overall, if you guys want one-on-one help, a private mentorship, you guys can DM me either on Instagram or on Discord, whatever the case may be, and we can speak about that, or you can join through the WAP link below. But overall, if you just want a free Discord, this is complete for free. People usually pay for this type of signals and information. Look, like I give literally anything. I'm pretty much open. The only difference with the mentorship is obviously you have my personal number and personal one-on-one Zooms. It's more in-depth. I give you like more in-depth, like 10 hours of content of me explaining everything as well, rather than just like a Discord. But again, this Discord is very helpful, trust me. Like for a new trader, I wish I had something like this. This was actually a student yesterday, a one-on-one student. He started, what was it? So he started, I believe it was like 4 months in, he got a payout after like a full year of not getting a payout. He got a $1,325 payout from Top Step. And yeah, this is just the start. The second you get that first payout, it's a snowball effect. Trust me. The second you get it, you already know you need to be locked in. You already know the mistakes that you need to avoid. And there you go. Just payouts just roll in. And that's pretty much it for today's video. I'll see you guys in the next one.